Yeah, good morning, Emmanuel. Please, we'll just wait a bit here for some other people to join before we commence. Good morning, and welcome to today's live session. If you're here, it means that you are serious about your trading and you're ready to do the needful. So it's always good that we engage like this so that we share ideas and I share what I'm looking at for the week. So why I usually choose Tuesdays is because I think to me that's when my real trading week starts. Yeah, my real trading week starts from Tuesdays. The market moves on Mondays. Good morning to you guys. Good morning, Lucky. Good morning, Precious. Welcome. The market moves every day of the week. Sorry, from Monday to Friday, definitely. But Mondays can be a bit sketchy, yeah. So some like yesterday was a good day for me actually. I made some good profit yesterday. However, I still don't really take it like a serious trading day for myself because I still just basically wait for the market to settle in. Then Tuesdays are really good days to start. It's just my thing. It doesn't mean that you must absolutely, work in the way I work. Some of you make mad money on Mondays, preferably, and then it just works that way. Anyways, that being said, we'll get to what we have in for today. Basically, looking at the market, you know how we do it. If you're new to the channel, definitely subscribe if you haven't. Every Tuesdays is where we do these live sessions. And guys, you guys know that for a fact, if you're really following up here and you go back on everything we talk about, basically the outline of the pairs that we look at and the projections that I usually give. If you go back afterwards or if you follow up on those setups, you know that most of them will usually hit. Like last week was pretty good too. Most of them hit the week before, and I'm hoping that this week is going to be another good week. So it's not just by looking at the signals that I'm giving out, it's basically taking your time to look at how I see the market. If you're trying to learn my strategies, SMC, just advanced liquidity SMC. And then if you're trying to, understand how I look at the chart, by me doing it here, you can easily follow up. And most times you see that our analysis align, right? So it's just like a double check of confirmation as well. All right. So with that being said, I think it's time we get into the chart, and then after I give you guys what I'm looking at for the week, then I can also take questions or pairs from you guys so we can actually look at them together. All right, good morning to you. Welcome once again. So I'm going to start today's analysis by looking at the dollar index because I'm trading more of USD pairs this week. So if I'm doing that, most times I would like to look at when I say USD pairs, gold is there, BTC is there normally, but more of GBP USD, Euro USD this week. I'm already on Euro USD, so I'll show you guys. So that is the reason why I usually start my analysis when I'm doing this kind of thing. I'll start my analysis by analyzing the dollar index. It just gives me a preamble, it gives me like a foresight into what the other aspects of USD, GBP USD, and Euro USD are going to be doing, right? So let's take a look at the dollar index. Let me share my screen now down to the DXY. Okay. Now, let me know please if you can see my screen. Just let me know in the comment section if you can see my screen. So I'm currently on the dollar index now. Please, someone just let me know in the screen if you can, in the comment section if you can see my screen. All right, all right. Somebody said they can, so we're good to go. All right. So, like I said, we don't trade the dollar index. Some people do trade it. If they use Xness, you can actually trade it, but I don't trade it. I just use it for to help me understand what Euro USD and GBP USD are currently doing here. And now, if you look at what is happening here from the dollar index, it has been slowly pushing up, even though the Iran Iran US war is still, ongoing and all of that, is still basically getting bullish and bullish. So let's start from the daily time frame. From the daily time frame, you can see that we're in a very, very what bullish momentum, right? Market is highly bullish, and at this point, it means that the dollar index, sorry, it means that GBP USD and Euro USD are currently very bearish. That's what it means, right? However, now we can look here that at this point, basic market structure. So I try to keep my chart as simple as possible. Let's go back to the first definition of market structure: higher highs and higher lows, right? So from this point now, if this is a daily time frame, we can clearly see the structures outlined, right? The higher highs and the higher lows. So that is how I start my analysis, by just looking at the market structure entirely. All right, so let me get this two out. So here you can see the impulsive. There's a break of structure right here. We had an impulsive and a correction here. We had another impulsive and a correction. So what is happening right now? The market has come to what? An area of interest, a buy area. So that's a support area, rejected a couple of times and created another impulsive move. So this impulsive move is on the verge of breaking structure, right? Is on the verge of breaking, or it has already broken structure if we go to a lower time frame. However, this is a new impulsive move. So any moment from now, if we have broken that structure, any moment from now, we'll be expecting to see what? A correction to happen, right? So we are on the impulsive, we're about to start a correction phase on the daily time frame. That is what it's telling me here. So I double down to what? A 4 hour time frame. So you can see the structural break a lot clearer here, slight and clear, right? So this is it here. So even if it's with a nip, we broke that structure. That's what is important. Now, are we going to continue in a bullish firm before we start the correction? I don't know. So what we're going to do is go to double down to lower time frames to look for any possible change in character, right? You don't want to see the change in character on the higher time frame. You want to see the change in character on a lower time frame. That's how you know the correction of the daily time frame is about to start, if that makes sense, right? So what are we to do here? Now we've already nipped to breaking the structure, so let's go down to at least the 2 hour time frame again. From the 2 hour here, you can see the break of structure getting clearer, and then we can see some kind of pullbacks. We cannot call this a correction yet. We're expecting a correction to start, but we cannot call this a correction until there's a proper change in character, right? From any time frame going lower. So I'm still going to go down. But for here, you can see the internal structures, the higher highs of the internal structures, giving you a nice looking schematic here. Then I'm going to go down to the 1 hour as well. It gets clearer by the day. Now, what the higher time frame does for me is to just see the bigger picture, then the lower time frame, to get a clearer entry. Now, you can see here, this is where we had our nice impulsive break of structure, resistance turn, support area. Now the market is hovering around here. However, since we're still in the bullish market, we cannot say that the market has actually changed direction to start a proper correction. Like I said, we must notice a shift in market structure. So I'm just going to go down to the lower time, because I'm actually looking for a great shift in market structure where we can say, yes, this market wants to start dropping. Now something interesting is happening here. When this market got to this area on the 30 minutes, when it got to this high, finally broke. You see, this is the line that broke that structure for us, right? And when it got to this area, I can clearly see here that this market was ranging, right? It ranged for a bit. If you notice, all these impulsive moves that we're having, most of them were not having massive range like that in the resistant area. They just go, resist, and drop. But this time, we had a range here, right? What does that tell you? That the market might likely switch character from this point, right? Because we've already broken structure, so anything can happen here. And then the next thing, after the range, we had a massive impulsive move to the downside, shifting structure on, maybe say if we go to 5 minutes, 30 minutes, 5 or 15 minutes, you see the shift here. However, on the higher time frame, it has not exactly shift structure. But there's something else in play here. Now, when this market dropped, this correction dropped, it dropped like an impulsive move, not like a regular correction, right? And then when this one started pushing back up, which is supposed to be the continuation is supposed to have more impulsive move, because we are still on a bullish market. Is that not so? So if we're still on a bullish market, I want to see stronger candles with momentum giving me this impulsive move. But that is not the case. We're seeing smaller candles, slower candles, lots of wicks which is a sign of a what? A correction. So if that is the case, that means that there is a possible change of character about to happen. Is that clear? Am I speaking too fast, guys? I feel like I'm speaking too fast. Are you guys following? Uh, let me slow down a bit. I feel like I'm speaking too fast. All right, so now I'm seeing a possible change in character, right? Because of this. And now I'm expecting that the market sells for me anywhere from this region. Sell. So when this sell happens, and you can see that here the structure is giving us like it wants to sell because we're having so many weeks, smaller candles and all of that. So if we manage and sell probably during the New York session down here and break below this low, we're beginning to see a proper market structure shift. So in essence, I'm expecting, if this guy has been buying, that means Euro USD and GBP USD have been selling, right? And Euro USD have come to an area of interest where it actually triggered my buy. I sent that signal out to my VIP signal group. I think if they had that coordinate set, they probably are in the buy right now. Since yesterday, I was in the buy, so I'm expecting this market to drop a little bit. If at least we're not going to drop massively, but we'll at least see some significant drop to maybe areas like this, down to areas like this to come and close up liquidity. But because the market have a lot of liquidity to come and take out, you see all these other blocks that are unmitigated. When we have that market structure shift, it will be coming for all of them one by one, one by one, one by one, thereby making the Euro USD to become bullish. So now, having understood this here, I will now move to my Euro USD to go and now see what is actually happening if they align. Now, this is the Euro USD pair I told you guys that I'm in on. So you can see right here, this is where we are currently. Now, just as you saw on the dollar index have been very bullish, while this one have been very bearish. So if you go down to the lower time, to the higher time frame, starting from the daily, you can see what is happening here. The massive sales all happening. Now, see where we picked our buy from. So let's drop down to the 4-hour time frame. This is where I picked my buy from. This order block right here, while inside this order block, we had a deeper order block area. Now I have my liquidity here, which market has come to take out. And you can see again the structure that this one is pulling. Smaller candles, waiting for market to come mitigate this area for a push. Now, yesterday we got in on the mitigation and market has been ranging inside this area, but finally pulled out and give us some profit. But we are not in the clear just yet, because if you go down to the 1-hour time frame here, you will see that the market pushed up this morning around 2 3 a.m. or so. It pushed all the way to this top, reacting towards this order block right here, this reverse order block, and it's dropping. So like I said, we're not in the clear until this happens, until something like this happens. Maybe this market drop down a bit, push up, break above this structure, then we can say that the proper correction has actually started. However, we have set our trap, we're in the market and we're waiting. So this one I'm still looking at the buy for this guy, but I will drop the signal for a re-entry when there is a proper shift in market structure. Then we can get a re-entry and then join in for the buy. It meets the condition. You can see the order block set up here because we still have viable places that this market might go deeper into. But the reason why I'm taking this from here is the liquidity that the market engineered just around this area, right? Engineered this liquidity. This order block swept liquidity before pushing up, breaking structure in line with the overall trend, and that is what we are in for now. So we're going to get a re-entry on this whenever we have a proper market structure shift. All right, so that's that on Euro USD. So we're going to move to my major pairs now, BTC, gold. Okay, so let's start with gold. Gold is almost everybody's favorite this period, yeah, and everybody's nemesis at the same time. So it's either it is your favorite or it is your worst enemy. Gold and silver, have I not? All right, so this is what gold is doing, and these are my projections for gold. So overall, on the daily time frame, Gold has been ranging in this area. Now, ranging is one of the sweet market to trade. Ranging market, yeah. People tell you as a beginner, they'll say avoid ranging market, just look for a trending market. Yeah, that's true. I will tell you the same thing. Avoid ranging market. But if you know what you're doing, if you're a little bit advanced and you have some experience, you understand that ranging market is a very sweet market to trade. Because the market in a ranging market, um, support resistance is very much respected. Order block is very much respected. So it just bounce off any support or resistance it sees or any order block. So that's why it's kind of like easy to trade. However, you have to be careful because once the thing busts out, but before it busts out, you know that you're in a good range market, you can take advantage. So the market has been ranging here. And one thing we do know for sure is this: whenever there's a range, I've taught you guys this thing before. Whenever I have a ranging market in in a resistant area, the market will usually will drop to the downside. Whenever I have a ranging market on a support area like this, it means that the market will most likely push up. Now, that is the case, right? But in some cases, you still have to watch out for the way the range is actually going. Now, in this situation, it's kind of slightly different. Why? Because I have something like this. If you look at the market, then it's now ranging in a what rising wedge format. And most times when you have a range in a rising wedge format like that, this is what happens most of the time because it gives you this. So it's usually come out like a chart pattern like this. And if you look closely, this is something very similar to what we are having, right? It's building a rising wedge pattern. And at some point, it will not hit to drop. So having seen this now, this is what we're going to see now on the chart majorly. Let me delete all of this. Okay, so let's double down to the 4 hour time frame. This is what we're seeing on the daily time frame. So let's see what we have on the 4 hour now. Now on the 4 hour, you can see that pattern I was, describing just now. See the range, it's moving slightly now. So while it's doing this, where is the target? Now we need to know where is the market going to and where is it going to drop to. So since we're seeing that if this market spiral up, like creating that wedge pattern, means that we're going to use the next excuse, which is the next powerful order block we're seeing somewhere for the drop. And where is that order block? You see this 2 hour time frame, this 4 hour time frame, we have an order block, but it's not so clear there, right? So if you go to this 2 hour here, you see the order block sitting very majestically. See this area? So this might be the potential push that we're going to need for this market to drop down and drop down to where I don't know. We might just keep dropping down. So for now, I'm just following the structure. Fundamentally, don't even know what is happening with gold, but structure-wise, this is what we're seeing, right? So breaking it down, all these ones are macro things because when you're talking about gold, you should be going down to smaller time frame to look for the nearest possible entry because gold now does not joke with pip counts. The pip count is crazy. So anybody trading, I always advise that if you're trading with $5, $50, $100, just try and be avoiding gold unless you want to risk all that money on gold, right? So we have to go to a lower time frames to look for entries. Now, this is the bigger picture. This is where this gold is going to. So if we're going to get here, we're going to look for how to join the market to get to this point and then possibly see how we can also sell from this point, right? So now in order to do that, we can see the structure that the market is creating: higher highs, higher lows, higher highs, higher lows. It has swept liquidity here somewhat. So it means that we're close. It's either it's going to drop from here or we're still going to see our market getting into this zone before the majestic drop. So now I'm just going to see how, because on the lower time frame, it is breaking structure to the upside. So I want to see how I can join the buy to this zone, basically. So let me look at the 1 hour first of all. From the 1 hour, we now see a clearer picture. So this was a trade actually I took yesterday. I'll still break it down. I was expecting, I took a close TP on this. This zone did not get mitigated. So basically, all these zones that did not get mitigations would get that mitigations when this market have tapped in and started and changed character to start dropping. Yeah, that's when I see market coming to react to all of these zones. But for now, it's going to leave them and keep moving ahead. So we're going to be using any nearest zone that has liquidity for the next move, any nearest zone that has liquidity for the next move. So if this is our target, it looks close, but you can streamline this. This is the main zone, right? But this zone also have something inside, another order block, which is around here. And that order block, meets the criteria of the 50% retracement points, right, in any zone, 50% area. So we might be seeing a massive push, and anything from this point to this point is massive tips on gold. So we can capitalize on that. So now that we're seeing the outcome, you can see here that I have a break of structure. So let's now break this down properly. I have a break of structure here, a clean one, a BOS, and then I'm gonna mark this as well as a break of structure. I'm using the body now, not the wick. I'm gonna mark here again. So this is my recent break of structure, which makes this my new trading range, right? From this high to this low as my trading range. So I'm going to be looking for my buy entries within the range. Now, already on the 1 hour time frame, I'm already seeing like an area of interest here, but let's dig into smaller time frames to get precise entries, right? Precise entry points. Now, this is what it looks like on a smaller time frame. So this was the sell I took yesterday. Personally, this one was just like a retracement trade I took, ranging down towards this order block that the market created here, and it hit TP exactly at that point. Then it swept the liquidity below. You can see this week sweeping that liquidity and then pushed up to create a new high. So this marks this place as what a protected area of interest. Now I just want to look forward to the precise entry to get it. So what I want to see now is market moving away. Then this is going to be the liquidity point from this low to this one. All of these are liquidity because this market came but did not get to it. So I'm going to go down again to the 15-minute time frame, and this is where you start seeing it happening more interestingly, right? So this is the order block right here, this last sell candle that served this liquidity and moved. Now there's something very dicey here. If you go to the 5-minute time frame, you see two things. You see, this is what we have on that 5-minute time frame, and on that on that 15 minutes rather, and then on the 5 minutes we have another order block area of interest here. So which are you going to use now? Most favorably, this right here is where a lot of people are going to wait for this order block. Yeah, that's probably okay, but I'm going to be using this one more, this zone more, because it serves as a what? As a breaker block, right? A breaker block. Now, a breaker block in the sense that this was a resistant level. This is a high the market created, and then it has an order block here that was not properly respected, right? And when the market closed above this order block, you see this pullback that happened, inducement, liquidity pullback, inducement pullback, and it did not get to this order block right here. So this order block is still valid. That's this breaker block is still very much valid because it has liquidity inducement, another inducement here, and market has not gotten to it yet. So definitely I will be using this particular place as my area of interest. Possibly put my SL just around here. Yeah. So we have over 180 pip, which is pretty much normal now. 180 pip, pretty normal for a buy. And then if you're targeting this high right around here, this is a 1:5. That is about 1,000 pips, 900 plus pip. And then if you want to even go into this particular area to hold, no problem. But I think this place is pretty much okay to target, right, for buys. Right, so you can still make this your entry smaller if you want, but me, I like to just give it breathing space, right? Can make it smaller, just like I did this one. This one was a very good risk to reward. See how small the stop loss was, and basically how I got this entry was from using a breaker block as well, a breaker block. But if you check from the 15-minute, I think you will see it better. 15 minutes. So you see the order block. This was the order block that the market failed to react to properly, and then it gave a partial reaction, and then back. And then if you go to the 5 minutes, you see that have another order block here, which was just perfect and just gave me a sniper entry, and I sold down. So this is what I'm looking for the buy continuation on this one. Already liquidity has been swept here, so we are on the verge of moving forward, and then now we'll just get a re-entry from anywhere around this zone, and then we'll push all the way up. So this is my gold setup. Are you guys still with me? Are you guys still with me? Please let me know. Oh, I've been talking, and it feels like you guys are lost. Please hit the like button if you're with me. Let me know that we're together. All righty. Okay. All right, so that is that on BTC. So let's sorry on gold, right? So let's go to BTC, and then we're gonna take. I'll just throw a little bit on GBP JPY before then. So BTC, here we are. Okay, so this is BTC. BTC was kind of crazy. Oh. BTC did me dirty last week. It did me dirty last week, but let's see what we have for this week. So let's hop on something because initially from last week I remember giving you guys an analysis for BTC to continue pushing up, right? But we did not get that continuation to the upside. And I noticed something here. So when your analysis does not go your way, sometimes you don't just stick to it and say it must happen like this. You have to be factual, you have to work with data, right? So the current data has changed and my bias have kind of changed because of what I'm seeing on the chart. I'm not going to stick to one bias because I just want it. That's very sentimental way of trading, right? So now we're reacting to this whole structure here on the weekly time frame, right? So when I saw this move, lower time frame break of structure, change of characters, it gave us the push that we're going to go up for a good retracement. However, if you now notice what happened, still inside this area, because now the market is dropping back down, right? It gave a nice bullish push. So let me open this up so you can see it, right? A nice bullish push, cleaning out this level of liquidities on the weekly time frame, then this candle dropping back into the structure, this other one back again. So this is a sign of what a like what we call the AMD, right? The accumulation and then distribution about to happen. So when I see this now, I'm expecting what more sells with just this move. This candle closing as a bullish candle, then the next one dropping back into the structure, right? So this is a very massive sign of what sell. Even seeing this on the weekly time frame. So and then this market, like I said, is still reacting inside this whole structure. So we still have tendencies of market dropping, even at least down to this order block here. So let me open up down to where this order block is before we know that whether maybe we might even drop below this area. So price, from what we're looking at, price is going to still drop down to almost $57,000 or even most likely to about 40K. BTC holders, crazy. All right, so let's break this down. So now that we're seeing overall that we might be trending to the downside, we might be pushing down a little bit. Then let's see what time frame confirms that as well. Now, on the lower time frame, not exactly lower time frame, but on the daily time frame, you can see this was the last stronghold, right? This was the last support or order block that pushed and broke this structure. And then that was where we're expecting our massive buy to move from. However, when this market came, it did not exactly close below it, but it swept liquidity, right? Now, it's very dicey. After it swept this liquidity, it's possible that we might have a massive bullish continuation like the projection I had from last week. But you can see the candles that this market is creating on the daily time frame. It has a lot of wicks, rejections from the resistant area, right? And here, from the daily time frame, this is also like a breaker block because this market did not respect this order block right here. So this is also like a breaker block. So two reasons why I'm seeing a sell continuation, right? That's a structural shift. Market is going to start selling now. One is that this market is creating a lot of rejection wicks, and then it's creating that rejection wick on a breaker block. Right now, for the breaker block, for us to see more validity in this confirmation, we have to still drop down to lower time frame to have more confirmations. So right now, this is what is happening. Market has gotten to that area that we drew as a breaker block, and you can see that there's an order block here situated on this particular point that we saw. Yeah, and market does touch that particular point, right? So what do we expect next now? Possible that market is still going to drop massively from here, but we want to see how we can now patch our way and get entries into it, right? So I'm still going to break down to lower time frames. Okay, so from the 4-hour time frame, oh god, market has already gotten to where I wanted it to get to. Shit. All right. This, oh god. Okay, so this is that 4 hour time frame, that 4 hour zone that I marked out, which is like the breaker block from the higher time frame. Now there's a mitigation that's already happened. I did not see this. We're supposed to take a sell from here. But now I'm just gonna wait because I've missed out already on that setup. So we're still gonna wait and see if market will still reverse back because we have not properly mitigated this order block inside here. We have an order block on the 2 hour time frame inside here. So there is every chance that this market might still drop back down because we have not fully mitigated that. And this is what I'm thinking. So if we might have a mitigation back into this area, we might have a possible buy, right? That will push the price up here. So let's still go down to the lower time frame and see where that buy is going to come from. Because what I'm having here, you see this move, this liquidity and this engineered area is a very probable buy area. So let me break this down. So I think 15 minutes or so, yeah, where I'm having this zone. Now, on the 15 minutes, we have this order block area of interest right here, liquidity engineered, right? Market came close, really close, and then pushed all the way back up again. So we'll probably have this whole sell coming down here for this buy to get active. So this is where I'm going to be taking that long position that would push me all the way. So I'm going to keep this here to give it some breathing room and then a push into the zone right here where we can possibly take another sell. But for the now, let's concentrate more on the buy, right? So this is my next buy zone for BTC. I've missed out on that sell, but we can still get in on this buy. And this buy, this is the entry, this is the coordinates. Buy at 65,000. 65. So you can just mark your own and follow up and see 965971.06. Then the SL is at 65. This is about a 50 pip SL, so 65, 45 point, okay, 45, 9.74. All right. So you can keep your TP open and just follow up. I like to just give majorly SL and TP. So you have your 1:3 risk to reward, 1:4, you can easily exit. But this trade is like a 1:5 points. All right. So we're targeting this 4 hour entry point. We're targeting the 4 hour entry point for a proper mitigation. This 4 hour entry point here, that is where we will be targeting for the buy. So I think the entry is clearer on the 15-minute time frame. That's where you can see the entry clearer. All right, so that's it on BTC. Then I think GBP JPY. I don't think I have much on this one right now, GBP JPY. I've been following this pair last week. I analyzed it last week as well, but it was very crazy thing because we got nipped out. This one was, I sent it to my VIP. You see how close this market just took us out and then finally dropped. So I've been anticipating this sell. So this sell held us here for about a week or so, just kept going up, and I see it was ranging massively. Like what I told you guys earlier, when you spot a ranging market in a resistant area, most times the market will drop down. When you spot in the support area, it goes up. So that was what happened here. It ranged here for a bit. We got entries from this point here after this impulsive and sell candle, right? Then from here, it just started ranging. And then finally, it nipped us out. Very, very small move. See it right here? And then it dropped massively, already hitting TP. So for now, I'm going to expecting more sales, but there is no clear entry until the market, coagulates more structure for me before I can find another entry. So that being said, we're going to now ask if you have any pair you would like me to look out for. These are the ones that I'm looking out for. I'm working on gold, BTC, and Euro USD. I'm following up on. So if you have a pair that you want me to look at, please put it in the comment section and we'll check it out together. We'll check it out together. So Euro USD buy is still ongoing. If you want to jump in, but I'll suggest, since you're not in already, because we're already in about a few pips, almost about to even hit a 1:1. We're like 11 pips up, while the stop loss is about 23 pip, almost a 1:1. But it has not moved out yet. I hate this pairs can be fucking slow. So, but I'm expecting the buy to, really push up for us. Majorly during New York session, we might see some really good move. So now it's rejecting, which is a good sign. And that is it. So, all right. So let's start with USD card. Let's start with USD card first of all. Let's start with USD card. USD card should be more like we're looking for how to gain some sell entries based on what we're seeing. But now let's do the analysis from top from the daily time. Oh, wow. I think we did USD card a week ago where we're expecting buys from this point. Market never got there and the buys moved along. Anyway, so okay, USD card. Now we're seeing from, let me go to the weekly time frame first of all. Okay. Okay, weekly time frame. Okay, so this is it. Now I remember this analysis. I think we did something on it a week ago where we had this. All right, this is a weekly time frame. Don't mind the whole markup. I'll still delete it. So what I'm just trying to figure out here, you see all this range that happened. The market broke out from this range, and then this was like the impossible from this low to this high, right? So basically, all this is like the trading range, and this market dropped down to the lowest point of support. That means that's a very deep retracement, and then it pushed up, then came back down and formed what looks like a double bottom. So from weekly time frame, as you see this double bottom, rest assured that double bottom. So the structure and the chart pattern already shows that this market is viably bullish. So we just have to keep waiting for how to join buys and buys and buys as we go on, right? So that's what the weekly time frame is showing us. Then we can come here 4 hour time frame, sorry, the daily time frame. And lest we forget, on the weekly, we have this order block here. So even if we're going to take out this order block, it will definitely react because this is where distribution happened, right? So the market will definitely react to this. So let's just mark that zone as a destination and keep it, right? So now let's drop down to the daily. Now on the daily time frame, this is the interesting thing we're seeing here. So this is the next low, the next high, rather lower high that the market is definitely coming into. So we have broken that structure or we're on the verge of breaking it. This high right here, right? So if we're breaking it, that means that we might just see a next thing that is what we call a correction about to happen, right? So we just ask ourselves, where is the next possible correction going to happen from? See this order block right here? It's very close to our zone, right? It's very close to the zone that we're expecting on the weekly time frame. So this order block can come mitigate, this price can come mitigate here towards create liquidity for this zone. But what we're expecting now is a correction to happen because you can see that this market has been massively buying and it just broke a structure here. So if we have a BOS here, that means we'll be expecting a correction anytime soon, right? And after the correction happens, we will definitely, I would prefer you see a correction happen so that you position yourself for the next buy, right? To push into the zone because from what we saw, this market will continue buying. So if that's the case, we'll now have to double down to lower time frames and now see how we can position ourselves when the market corrects and where to join in when the correction happens, right? Okay. Wow. This is a 2 hour time frame. And look at how the structure is just moving. It's just very similar to what the USD is doing, right? Very tangy kind of move. It's not giving you, if you enter this, it will be moving up, but it's very, very slow pace like that. And the structures are not so clear, man. Okay, so if we just have to look for how to keep joining in. So now, basically, we're waiting for a next correction to happen, and the market has not given any sign to break structure, right? So you can see the previous break of structures here. This is one break of structure, a BOS. This is another one, previous one, break of structure. So this is the current break of structure that we have. So open it up like this, the current break of structure, and this is the next possible. This is the order block zone we have here. Now, after market broke this structure, see our inducement liquidity here, right? Your inducement liquidity, which makes this place what a viable area of interest or a viable UI, right? Because of liquidity. Now, two things involved, right? So we see that we're looking for a buy from this zone because of this inducement liquidity. Immediately market shift down, we want to see a buy from this zone. Now, this is exactly the same place we're going to see a market structure shift in case this happens. In case this happens, right, then we have a shift here. Then we'll have a correction about to start. So since that has not happened yet, this is what I'm going to be waiting for, a buy from this place, the lower time frame. So let's see what 1 hour looks like. So 1 hour is still confirming what we're seeing here. Our break of structure, right? Adjust this proper. This is the inducement, very clean one. Market has not gone, so this order block is still very, very viable, right? And then the same thing on 30 minutes. So yeah, this is it. This is what I got. This is the buy zone. So you can either use the higher time frame entry, or you can streamline to get a smaller entry by getting what your entry down to this order block open. Whichever one you want to use is still fine. So you get a smaller entry, stop loss is 12 pip, and then all the way to this high here will give you 1:4. But you can target this zone right here, which is a 1:6 risk to reward, which is pretty hot. Now this is not a bad setup at all. Even using this entry here and using a stop loss here 16, so you're originally to like 1:5 risk to reward, or you can take it lower to get a better risk to reward. So that is it on USD card. It's a very sweet setup actually, a very sweet setup. So I'll also look into this one and follow up on myself, for myself actually. All right, so we still got a little bit of time, so we'll go to the next one. Let's check AUD JPY. AUD JPY. AUD JPY. Sorry. AUD JPY. Okay. From the 4 hour, let's go to the higher time frame here. Daily time frame. Okay. So on the daily time frame, let me see the weekly first of all. So the weekly time frame has broken structure here, and a correction is about to start happening now. We might have a massive sale ongoing. Now this is another strategic zone. This is another strategic internal zone. Now there's a break of structure from the weekly time frame, and this market has given a triple rejection, 1, 2, 3 rejection on a weekly time frame. So we might see a possible massive switch in character, right? So let's go to the daily. Now the daily, you can see it's clearly doing the same thing, right? Break of structure here. Another break of structure here. So change of character is formidable. So I drop down to the 4 hour. We're massively on the sell vamp. Okay. So that just confirms that, yeah, the change of character has occurred. We are on the selling phase right now, massively on the selling phase. So now I can concentrate on, first of all, looking for the destination of this sell, which I can see clearly here that there's a very sweet unmitigated order block at this zone. So I'm going to delete this for clarity. Okay. So when you have all of this, when this structure have changed, all these places I just point to take profits, because when you get in on the sell here, and all these unmitigated order blocks are places you can be taking profit, because the market will definitely react to them. They probably still take them out, react to them, still probably take them out. So now I can concentrate on this particular downtrend that I'm seeing, right? So 4 hour is not so clear, so I'm going to go down to 2 hour and start looking for how to break down this downtrend movement. So I'm going to look for my recent break of structures. This is one, a break of structure to the downside. Then I have another break of structure right here to the downside. So this is my most recent BOS, right? This is my most recent BOS. And all of this is part of the range. So now I'm going to be looking for how to get in an entry from this particular range. 2 hour is not so clear, although it looks like there's an area of interest marked out here on the origin of this move. Origin, this one swept liquidity, so this origin has, yeah, something to offer. So I'll go down to the 1 hour. The 1 hour, that remains an origin. On the 1 hour, I can see liquidity engineered here. This is liquidity. Okay. Then I have to still look further. 45 minute, nothing exciting. 30 minutes, all still the same. So I'm still going to just stick to the 1 hour and wait for price to, come into the zone. So this is where I'm going to be taking myself from, this zone right here. After market has served this liquidity, you see this double bottom here. I'm expecting it to push price up. So I'll be taking myself anywhere from this region. I'm not going to pinpoint a particular sell coordinates. Why? Because you see the way this structure is not very timely and very, nicely situated. So I would rather just wait for this market to come in here and then see some rejections, like confirmations. Then I take my trade from this spread rather than using the pending order. I'll use confirmations to rather enter the trade. So that's that on AED Okay, so somebody's asking, for a day trader, how would he analyze and on what time frame? I'm a day trader now. This analysis I'm just doing is the same thing now. It's the same thing. As a day trader, you don't need to overdo too much. Since you're a day trader, you're looking for entries, quick entries, right? The top-down analysis is always very important. No matter the time frame you're trading, no matter the strategy you're trading, top-down analysis is always very important. So what I'm doing here is basically top-down analysis. If you notice, I analyze from a higher time frame, then bring it down to lower time frame. So as a day trader, you're looking for your entries around 15 minutes or 5 minute time frames. Your higher time frame should be like 1 hour and 4 hours, right? Why I use the weekly and the daily here is because I maybe when you call a pair that I have not seen in a long time, I have not analyzed in a long time. I just want to see what the market is doing generally. That's what it helps me does. And I double down to lower time frames. But if you've been following up your pair, so your 4 hour is a higher time frame. Your daily time frame is a higher time frame. All what the daily and the 4 hour does for you is to give you the direction, the general direction of the market, right? So when you've understood the direction of the market, the sweet thing is this: try and understand. I see when I'm looking at the chart here, I see the chart as a map, as a map. This is what I always teach my students. I see the chart like a map. And if you're looking at the chart as a map, you have a destination, you have where you're going to, and you have where you are currently. So the higher time frame tells me where I am going to. So I now go down to lower time frames to get on how to maybe get a taxi on how to get to that destination. You understand? So like for example, you see on this AUD JPY now, I first went down to the higher time frames rather, right? To know where this market is going to. That was why I was able to pick up on this right now. You see, the market is creating lower highs and lower lows. Now, what is the market doing? It's reacting to this particular order block. That is why you're having these weeks. That's why you're having this rejection. So this is the order block that the market is reacting to. It has reacted to this particular order block here. Let me show you something. So as the market is doubling down, right, you see there's an order block here. It's reacted to this order block, finally broke past the order block, and it dropped down. Now this next order block is where it's reacting to. It's reacting to it right now, and then it can still possibly continue going down. Why? Because the market is in a massive downtrend, right? So the next order block I'm looking at is this one. So if we're still going to continue our down streak, that means this is the next zone the market is heading to. So what I'm going to now do is now look for how to join the sell down to this area so that I'm going to take my profit from it because it will definitely react. It might continue pushing down, maybe because it still has many other areas to go to, right? You see, this is another order block here that the market can come to. However, I don't care about this long one, right? Except you're a swinger that you want to hold all the way. So even if you are a day trader, you may not even hold up to this current order block. But if you can get in it, so it's just like to know that this is where the market is going to, right? So you take a bus from point A, the boss will tell you that my last bus stop is point K, right? So between A and K, you have many bus stops. So your job as a day trader is to find where to join in, enter a bus that you know that okay, this is where the bus is heading to. That's what your higher time frame tells you, the destination. Then those lower time frames are those small bus stops. So you may not get to that destination, but you can get to from point A to point C. You can get from point A to point D, if that makes any sense. I don't know if the analogy makes sense, but basically that's what I'm saying here. So I want to join, like I'm saying that this is the next zone that the market will react to. Then I now go up down to lower time frames and check for how to get in by using my strategy now, this SMC concept, by looking for order blocks, area of interest, looking for liquidity, and all of those things that would help me get to that particular zone. So that is what I did now. So this is where I get my entry from. This zone is where I want to see my entry. Then I want to what? I can hold till the next zone, right? Or just get a good risk reward. If you get a 1:4, 1:5, you're good to go. You don't need to wait for 1:10 as a day trader, you understand? In fact, anything from 1:3 is okay. Even 1:2, depending on your risk management strategy. Yeah. So that's it. I hope I hope I answered your question. All right. Okay. So somebody's asking for the SL and entry on gold, right? So this is the setup for gold. Let me write out the coordinates. It's a buy limit. It's a buy limit order. So I'm doing entry at 45.28. 45.28.93, and then the SL is going to be 45.10, 45.10.35. So it's basically like 180 pip. However, you can decide to make your stop loss smaller, or you can decide to make your stop loss smaller just within here to here. But I like to give mine a little bit of breathing. Sorry, I'm having a bad connection. Sorry, I don't know. Something's happening to my network. All right, so I'm gonna check the last one. That is Chef JPY, right? Chef JPY, and then we'll end the class there. Chef JPY. CHF JPY. CHF JPY, okay. Okay. You guys really have a knack for all this kind of pairs. Really, I don't know what you guys see in this pairs, but damn. Like, The setup self, the candles on this chart self is scary. Anyways, okay, so let's see how we can break this down. Chef GPY weekly time frame. Market is dropping after this buy is okay. So let's see what the daily time frame is saying. The daily is it's quite a thing. So okay, so now it's beginning to make sense now. So I can see from we've been very bullish, right? And the bullish market has been giving significant highs, clean highs, and now we have a triple top high here. One, two, three, triple top high. So what does that tell you? A rejection pattern. Market is reacting to what? Massive drop, right? Now after this triple top, a change of character is about to occur, right? Or it has already occurred. Let us see. So yeah, so we can confirm now that we are swinging to the lower side. That means we are bearish, right? So we can confirm that we're bearish. So if we're bearish now, see our triple top one, two, three. It has happened. Switching character has happened. Market structure shift has happened. So now I'm very, very much what bearish. So now I want to see how I can join the bearish trend. So this is the last break of structure I have. This is the last break of structure. Market just nipped this particular one, just broke the structure. And then we can see here, when a trend, like I always say, when a trend has been in one direction and it will be creating so many, loopholes, like so many points that the market have not properly mitigated. Now, it is usually when a switch trend that those places are going to now be what filled up. So we have a lot of places to go and fill up. So this is the last break of structure. And that means from this point to this point is a range, right? If that is a range, so where's the next point, possible place the market will come pull back to? So all these places, there is no imbalance left. The market has closed back all this gap. The latest imbalance the market still left open is this particular zone. And this place have engineered liquidity because after this break, this is the immediate pullback that came close to our area of interest, right? So this is where the break of structure happened. Then after the break of structure, we'll start counting our pullback, right? That's our inducement liquidity. So this is where the inducement liquidity was able to get to, did not get to the standing order block right here. So this becomes our what? A viable sell limit zone. So this is a very pretty simple analysis, right? No much complications on this one. Looking very nice. So I'm going to be taking a sell from here to wherever. So I'm going to be targeting like a 1:2, minimum 1:3. Are you serious? This way a 1:3 will get us to. Wow. Right. So this is it. This one you can target as much as you want because I think this still will sell even more, keep selling even more all the way down. But if you don't have the width to hold, once you've been able to get your 1:3, 1:4, you can exit the trade. Right? You can exit the trade. So this way you have your inducement liquidity and then your entry points. Pretty simple. All right. Oh my God. So you could not see my screen all this while. Wow, 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 wow. I think the network disrupted the whole thing. I think my network disrupted the whole thing. So let's go back to that place again. All right. So tell me now, can you see my screen? All right. Can you see the screen now? Our time is off already. All right. So let me just quickly run through this last one. I've already done the breakdown, but since you guys say you're not seeing it, let me just quickly run through it. Yeah. So I started from the weekly time frame, right? So you can see we are very much in a very about to start, a very nice downtrend. That's what it's looking like on the weekly time frame with so many rejections up there. Then I went down to the daily time frame. On the daily time frame now, I can see 1, 2, 3 tops. That's a triple top chart pattern, right? And if you look at all these points, from while this market was building up, it never gave us a strong resistance like that. So after giving us this strong resistance now, this just tells you that the market wants to drop massively, right? So coming down to the 4 hour, You can see the triple top much clearly, right? The market structure shift has happened. So this is the last break of structure to the downside that happened. So if we find this, since we've seen this last break of structure, now look at this has become our trading range, yeah? So in all these zones, in all these places, there is no imbalance left, no proper order block that has not been mitigated. This is the only one that is standing unmitigated and without any kind of imbalance, right, to be filled. So now after this break of structure, this is the last inducement pullback we had that came close to this area of interest, which is why I have my liquidity points at this zone and my entry on this particular area. So this is a pretty very simple setup to look at. Very simple. Why? Because the market is already trending to the downside. And as it's trending to the downside, you just look for how to join it, right? And you can see this order block swept liquidity before the drop. So this is a significant POI for you to get your sweet entry. So from here, we can just get a simple I think 1:5 risk to reward, because we're still expecting that all these order blocks and all these swing points that was not mitigated properly before, the market will be going to mitigate them bit after bit, one by one. So this is where you want to join your setup from. So you can just mark this up on your chart and follow it up, wait for the re-entry to come, then you can, join in from there. All right. I think this is where we're going to end today's class. So from everything we've done, just basically follow up from your own end. What I'll be expecting of you to be doing is, while I'm doing the analysis, you can be doing it the same thing on your own device. Then after the class, you can follow up personally some of the trades. You can take them on your own, and then you see how the market reacts. Because most of the setups, if you drop like 3, 4, 5 setups, at least if you drop like 5, at least 3 to 4 of them usually plays out. You guys can attest to that as well. So just follow up, and then when I get precise entries, I'll also drop some signals on our Telegram channel, right? So if you're just joining in, you can check the link in my page here to join our Telegram channel, and then you can be following up as well with the signals I will be dropping. So let me know if you guys enjoyed this and had any, positive impact. Please leave a like, make sure you subscribe, and then I'll see you guys in our next live session. All right. Bye, guys.